Ira Epstein of Linn Associates with your metals market update for this wild, crazy trade day on Monday, the 5th of August, 2019, just about 3:35 p.m. Central Daylight Time. You're looking at approximately the settlement prices in the gold and the silver. Copper was actually about a penny lower than this, and you're very close in the platinum and so on to it. Remember, it's 3:35. The markets will quit trading at 4, but the settlements have been determined at 12:30 p.m. Central Daylight Time. Stock market down hard as China let its yuan, and this is partially behind everything, crack through the 7 level. It really falls through it. It means you need, the dollar will buy you more yuan. And if that's the case, when you have a tariff and the goods are more money, well, the dollar's buying more. They're trying to countervail it to a certain part. The president, of course, called them currency, and I'm talking the Chinese currency manipulators today. Energy's got hit pretty hard on this, as you can see, because of the world slowdown. People are fearful that as the world slows down and this trade war between the U.S. and China shows no sign of abatement, that it'll just drag everything else lower. We'll see. We've been here before. You get these corrections in the stock market. You haven't had a 10% correction, let alone a 5 or 6% correction in a long time, so traders get nervous from it. But when you look at gold, the one thing that's evident is the gold market's become the safe haven, and people are running to that. Bitcoin, the yen, and treasury instruments. And you could see this close in the gold is now just shy of about $200 off the low that it made in May. When we look at this action so far, if you take a look at a daily chart, you were in this trade action, caught in it, if you will, from this past period right here. Now on Friday, the market had an outside day down. One of the things you hear me say often is if you take out the high of an outside day down within 2 trading sessions, it's a trap. So here's the market, and here's where you're going. Do we understand that? So you set the trap on Friday. If I said that wrong, it was on Friday the trap set and you exploded to the upside today. Now, where is the resistance, support, and the like? Well, first off, the chart pattern's ugly. This outside day down, and when you take it out, throws the pattern with the swing line out of kilter. The 18-day average, I will contend, which is what I call the line in the sand, is still the support in that 1437 level. You cleared the Bollinger Band on a settlement on Friday, and you're extending that rally. So it's only 1 day in a settlement basis over it. You can go further than that if you're going to break out. And I don't think you'd argue we had a lot of sideways action right through here. So you've got something of a base formed if the market wants to move higher. When you look at momentum, you're overbought. So I have an overbought market that's over the upper Bollinger Band, trying to break out and see if it can carry any further. If you come to GLD, it's the same pattern, a lower low and a higher high, and first day over the upper Bollinger Band. And you went in the gold miners and you're knocking on the door of the upper Bollinger Band. You got to 2901 today. 2904 is the Bollinger Band. Remember what the Bollinger Band is. It's an algorithm designed to keep the market trading within it 95% of the time. Therefore, it represents resistance or support, the lower and upper bands, when first hit. After that, it takes a little bit of a different nature. The gold-silver ratio is still favoring gold over the silver. Not a surprise. If world economies are slowing down, why would silver keep up with gold? Logic there. In the silver market, you've had a pattern of lower highs, lower lows. Let's assume the market can rally more. 1664 is the last rally high. Even if it's taken out, all you'd have is a pattern of this low under that one and then a higher high. Supports on breaks towards 1614, and again, you're overbought. In the copper market, China's feeling the pain. This is the sideways action that I so often look at, and the market first on Thursday tried breaking out, followed through on Friday, and it's still going. Yes, I would expect the market to climb to the right-hand side of the Bollinger Bands. Is the way I count Bollinger Bands when you get successive closes under or over the band. Each one of those numbers I subtract from that 5% of the time it'll stay outside of the band. So I give the market tomorrow a 2% chance of staying out of the band. That's not bullish. It just means that there might be a better opportunity for those that are short, that want to sell short doing it, and for those that are looking to cover shorts or trying to catch a bottom, thinking that the market might get within the band. That simple. In the platinum market, you fell down over the past 3 days to a combination of the 100-day average of closes and the 18-day average. The market is having trouble at this. You've still got divergence with momentum down to trying to convert itself a bit sideways, but the trend is down on the swing line and the bias up since you closed over the 18-day average of closes. The palladium market is very similar to the support zones that I looked for before. Generally speaking, the first challenge of the 100-day average and the Bollinger Band is an area of support. That's not to say it can't go further down. You certainly have the sideways action here to drop. Market drops a little more, but it's trying, as you can see, to get back into that general area to decide what next. Is the trend down? It is. This arrow actually is correct where it's pointing up, because this, you've got this outside day up and then you took it out. The market needs a better setup on the swing line so I can define it for you better. In the dollar index, I wish I could say I'm surprised. All you did is pull back to this line in the sand. You lost the embedded reading, and if you take a look, you lost that reading on Friday. When that occurs, you'll hear me repeatedly say, it's often a sign that price and the 18-day average want to make a run at each other. Do they have to? No. But it's often a sign, and go back and do your work and you'll come up with your own conclusion. And that's what it did. Now the game is set to square one. What next becomes the big question. And I'll be answering that to a degree in the morning, because what I do is, this morning, for example, I think I started recording at about 5:40 in the morning because I wanted traders, I knew it was going to be a pretty crazy day. I wanted them to stop second guessing and get some ideas as to what I was seeing on the charts. And that's what I record early in the morning for. You won't see it on YouTube. You're not going to get it for free. It doesn't exist that way. Where it's at is either on our website or in your platforms that we put out to people. So you got to get it one of those two ways. I typically cover 40 charts on futures and 5 ETFs. In fact, I can go for more ETFs. I added an SLV ETF today for people that wanted to see that. So I'll rotate. If you have something you want me to cover, I try to do it. So just write me, put it on that YouTube channel, and if I see the time and I think it makes sense for people, well, I'm not against putting it out there for you. But what I do in the morning is I'm going to give you technical analysis in detail. I'm going to say buy here, sell there, here's your entry, here's your exit, here's where I'm wrong, here's what I think the profit objective on that can be. And it's not meant to be long-term trading, and it's also not meant to be day trading. It's more swing trading back and forth, because let's face it, the leverage in futures is 90%. Will I cover fundamentals? It's a guarantee. I'm going to talk them. I'll give you what I'm seeing and where they're coming out from. You may find that this helps you in the morning as you're setting up your day's trading and what's going on. I will cover the markets in this exact sequence each and every time, and on the bottom there's a scroll bar. Just pull on it. It'll light up. It'll say you're in interest rates, you're in metals, you're wherever you want to be in it. Plus there'll be a lexicon on this side so you can quickly go there and see what you want. The idea is to save you time, not to have you have to look at 40 charts at a time. That's up to you. So what do I do and how do I charge for this? It's pretty simple. If you haven't tried it, it's 26.5 cents a day. In other words, if you can't afford that, what are we kidding ourselves about? Maybe you don't want to afford it. That's fine with me too. After that, it's $15 for every 30 days. And if you should buy a 1-year subscription, which I'll round out to be in round figures 360 days, it's $156, another savings for you. How do you find out more about it? Go to our website, www.iraepstein.com. Under Education or Research, you'll see it there. You'll see the morning subscriber video. Click on it. You can also click right here. It'll take you to that page. I'm Ira Epstein. See you tomorrow. Have a great day.